Yo. Welcome back, guys, to another CMT Lunch Hour. I'm Larry Thompson. I will be the resident CMT today, walking you guys through some charts, giving you some updates on the market, and sharing some of my thoughts. So, we will get into it, right? Start of March Madness this weekend. I'm a Clemson fan, so you guys can pour one out for me. Big upset yesterday by the boombox speaker team, whatever their name was, McNissy State, whatever. I'm sure we'll know after today their name a little bit better. But let's crank through it, guys. Another messy week. So here we go, guys. Things I'll be chatting through today is S&P 500, baby steps, right? Just the little steps the market is taking in the right direction, I might say. We'll look at CMT. Lesson of the day will be rotation, right? Some people will say rotation is the lifeblood of a bull market. I don't know if I agree with that. I don't know if I agree with the fact that people think rotation is the lifeblood of a bull market. And I'll kind of get into why I think that. We'll also do a thought experiment on inverse ETFs and just looking at the market upside down. And then lastly, of course, chat already popping off. Already some funny comments in here. I see the chat sharing some stuff today. So chat, I will be going through any chart requests you guys have. So send them over, right? Blast a chat with some charts and we'll get to it. So first thing I kind of want to start with today is let's just take a look at the baby steps the market is making, kind of the directions it's trending in on a shorter time frame, right? So here we go, guys. We'll start here with the S&P 500, and we're taking a look at it. This is 1 month, right, since that initial break that took place February 20th. And you could see, right, the market sell the rips, right? This is using a 5-day moving average. It's been a sell the rip market. And until that changes, right, that's kind of the strategy people have been imposing. A few ways to think about this, right? Everyone, I think, is familiar with looking at a chart and understanding a downtrend. Some of the things we can use to help us with this thesis is looking at RSI, looking at the momentum, right? So RSI is doing a calculation of the average size of certain moves that take place, the average up versus the average down. And you can see the market was stuck in this bearish regime, right? Staying below this 50 line, right? That might be a critical threshold line for some of you out there. And then we could see, right? This is what I'm referring to as baby steps, right? We started to creep up a little bit, started to get above 50, right? Started to get in this green zone, right? This 5-day moving average that was serving as resistance, right? We're at least fighting it, right? We might not be winning the battle, but it's baby steps, right? And so you think about baby steps, what are they, right? Small little steps. They're sporadic. They're unpredictable. You probably wouldn't bet your life savings on them. And that's where I think we're at with this bottoming process. I think it's baby steps in the right direction, right? We understand we're already in a 10%. We already had the 10% pullback, right? So for us to drop further, typically based on a lot of historical studies, right? For us to drop further, it has to be something related to forward-looking pressure of a recession. And so if we start to see the outlook change for predictability of a recession, you would probably see a further drawdown. But from here, right, there might not be a lot of meat left on the bone to the downside. But it doesn't mean we have to go up, right? We're just taking this baby step, chopping in this area of the market. And I think it's important during this time, just take these hands, right? Take your hands and just sit on them. Just chill, right? March Madness just started. Watch basketball. There's no reason to be in the market, right, trying to pick this bottom. Or if you are, right, manage risk accordingly. But it's baby steps, right? A lot of strong bottoms that people buy aren't baby steps, right? They have a lot of velocity and a lot of thrust underneath the surface. And we're just not seeing that, right? We saw a little bit of an upside here, but then we've just been trending sideways, right? And so that's just kind of my initial thoughts on the S&P 500 here is it's just been baby steps sideways, right? You could even call this a bearish flag, right? We had the downtrend and then we're kind of stagnating. So we could see a flush lower, right? So that is a high potential, but we could also see higher. But either way, I think this is just a low probability trading environment when it comes to picking a bottom, right? And there's a lot of stuff we'll go through today why I think this is just a low probability trading environment. And one of the tools of being a technician is you can look at breadth, right? We can study breadth and study things underneath the surface that help us understand why the environment is so messy. Because I think about it all the time when it comes to fishing, right? Your uncle, right? I live in the country. I live in South Carolina, right? I got this honey hole, right? What does your uncle mean when he calls a fishing hole a honey hole? He means it's a place where there's a lot of fish to fish, right? Nobody wants to fish where there's not a lot of fish. And so we can look at a bunch of different intermarket relationships, a bunch of breadth data to kind of see that now is not the time to be fishing in the market. And so I'll just share one here quickly, just kind of relating to that topic is if you look at just percentage of stocks above the 200-day, share this chart here. Right, look at, we have the S&P 500, S&P 400, and S&P 600, right? These three market indexes as a whole make up the S&P 1500. And you see here, all of them, the majority of stocks right now are below their 200 days, right? So what's that tell you? It tells you in the pond you are fishing in, the majority of the stocks are below their 200-day, which makes bullish bets and honestly sometimes bearish bets low probability. So what do we want to do in this type of environment? We want to wait for these to change. We want to wait for more information to come into the market that is changing this breadth dynamic, changing the current market environment to be one that is more sustainable for placing trades that make money, right? Another chart we'll take a quick look at here, right? Look at NASDAQ, new highs minus new lows. Okay, so you can see here, right, kind of sporadic last year. NASDAQ is not one of the strongest indexes as a whole, right? It has a lot of junky stocks in it. But we saw a huge flush out here, and we're just persistently making more new lows and new highs, right? So here's my question. If you just think about this chart, if the majority of stocks aren't making new highs, why would you be betting on stocks to make new highs? Right? Why would you be betting on bullish breakouts if the majority of stocks aren't breaking out to the upside? Same thing with downside. You can actually see new lows are starting to contract. What's that mean? It means why would you be betting on stocks to break down right now? Because we can see the breakdown already occurred and now we've recovered. So we've taken baby steps in the right direction, but we haven't had that thrust in the right direction to actually mean anything and be any meaningful change in the market. Look at the S&P 500 new highs minus new lows, right? Look at this chop fest, right? This is just a chop fest. This is not an environment that people are making money in placing trades, right? Low probability, right? Low probability market environment, right? This was 2023, 2024, right? You guys don't have to be rocket scientists or ophthalmologists or be a sniper, right? You don't need a microscope or anything fancy to see that we're making a lot of new highs last year, and then coming into December this year so far, it's been a chop fest, right? So with that backdrop, right, take a deep breath and understand that the majority of money is made in a market when it's a good market, right? Don't try to be a hero in this type of environment, right? You don't want to be taking swings because you have an ego associated with, oh, I always need to be in the market. I don't want to miss the bottom. Price will let us get back in, and right, we do the show weekly. We will see that change occur. Right now, it's baby steps. It's not occurring at a rate that makes sense to kind of just go full bore, swing the bat, right? So just wanted to give you guys kind of an overview of that. I still just think it's messy. I still just think these steps that we're making here in the S&P 500 are slow, right? Slow and not that steady. So that's kind of just the overview of what I'm seeing from the S&P 500, guys. I see people are blowing up the chat with ticker requests. Keep them coming. I will get to those here in a few. But I just wanted you guys to kind of understand how I'm thinking about this right now. I get paid to trade the market, and so I just want to give you guys the toolkit to kind of understand how to assess the situation. And right now, it's not pretty. So next thing I want to take a look at, just doing a thought experiment here. I want to get what the chat thinks about this chart. So this is the S&P 500 inverted, right? So it's S&P 500 flipped upside down, right? You put a negative in front of it on stock charts, and you can see it takes the chart and flips it upside down. Also, I got this this is a 1-year chart, right? I can zoom out here. I'll zoom out real quick, right? You can see long-term uptrend, aka downtrend in the inverse. But when we zoom in, like, are you buying or selling this chat, right? Would you buy or sell this chart? Because just take a look here, right? This is the S&P 500 flipped upside down. If this was an individual stock, you guys would be like, look, it's completing a reversal to the upside. So what's that mean for the S&P 500, right? It means the S&P 500 might be completing a reversal to the downside. So I do this, right, as a thought experiment, as just an exercise to kind of change the way you think about things, because everyone in society is going to have standardized ways of viewing the market and thinking about the market and how to act on the market. But we can see here 565 is this key level, inverse or upside down, right? The market needs to get back above 565 for anything big to occur. It needs to reclaim its 200-day moving average, or the market is guilty until proven innocent, right? There is downside pressure in the market. And so I just I understand the market goes up 80% of the time. I understand it takes a lot of effort to be bearish, right? There's a difference between being bearish and waiting, right? Those are two different things, because we're not going to get back to new all-time highs before we get to 575, right? Before we get through the 200-day, before we get through the 50-day. So just allow the market to process what it's doing right now. And it's probably not going to do it during March Madness when everyone's in front of their TV screens not looking at the market, right? So just take this with a grain of salt, understand the context of this, and just maybe sometimes flip your charts upside down just to get a different viewpoint of how the price action looks. Because everyone wants to talk about, like, oh, the market just started correcting in February. Well, to me, it looks like it's been building this top for months. It's been building this top since September, right? This is a longer term 3, 4, 5 month top or bottom pattern in the inverse chart. So people are incentivized to tell you to buy stocks, right? The bull markets are when people make the majority of their money. It's when advisors grow assets under management, yada, yada, yada. It's when big ideas come out, but just understand that things can happen in the market that we don't expect. But this is just kind of a different view. What do you guys think about this? You guys buying or selling this inverse chart here? All right, what are you guys doing with it? So just wanted to kind of give this view. For me, right, I'm not swinging the bat until the market gets back above 565, right? I'm just not. I'm sitting in more cash. Also want to admit, the market doesn't trade downward the same way it trades upward. So the market isn't just going to trade the exact same way when you inverse a chart because of the mechanics of the market. They're made to go up over time. This is just done as a thought experiment that another 10%, right, another 10% down, right, is 505, 506, $500 level. It's not crazy, right? It's not crazy to think we could drop another 10%. I think the probability is low, but I also think the probability of going back to all-time highs when we're below 561 is low. So, guys, that's kind of what I've done here is I've looked at the short-term data, right? We looked at breadth analysis, the internal market to look at the environment, and then now we just took a thought experiment of flipping the chart upside down, kind of to come to the same conclusion that the market is messy. And so I just want to spend a little bit more time on this week, because I don't think there's a ton of stuff you should just be swinging the bat at when the market is kind of under pressure like it currently is and messy like it currently is. We can wait. We can allow the market to digest and take time for those things to occur. Last thing we'll take a look at here is chart from my good friend Sam Gatlin. You can follow Sam Gatlin on Twitter at Sam Gatlin. I'm not sure if he has a StockTwits account, but comes from some of my friends at All Star Charts. So this is the year-to-date performance, sector performance of the S&P 500. So there's many ways to interpret this chart, but one of the things you'll often hear in the market, and I consider this dogma, right? Like, I consider it dogma. And my goal, I'm a CMT. I love technical analysis, but I want to rid the markets of dogma, and I want people to be more quantitative in their approach. I want them to be pragmatic in their approach, and I want them to understand the nuances and market mechanics that take place, because that to me is what pays. Dogma doesn't pay, right? So taking a look at this chart, right, you have the 3, 4 leaders, 5 leaders this year are energy, healthcare, utilities, real estate, materials, right? Those 4 sectors, 1, 2, 3, 4, 5 sectors, make up a very small percent of the stock market, right? XLV, right, third largest leader, but that's 10%. So you have like 3, 3, 3, 3. So you have like 20% of the market here, right? 20% of the S&P 500 is the leaders this year. And so what do you have at the bottom? XLK, XLY. Those two combined, right? XLK by itself is 30%. So it's more than these four sectors combined. So think about this. If rotation is the lifeblood of a bull market, but if the rotation is out of the sectors that make up an overwhelming majority of the market, that tells me that rotation is actually what's going to kill the market. Rotation out of tech and communication services and consumer discretionary is what will kill the stock market because that's where the largest stocks are. And so this rotation, if it keeps occurring, we'll see what we're seeing at the index level. We'll continue to see downside pressure. And what we could have is a stealth bull market where stocks underneath the surface, right, continue to do well. And when we get to that stage, I'll let you guys know. But it's taking time, and we need to see that first. We need to see these new trends kind of form and establish themselves, because look at the healthcare chart. It's not that pretty. I'll take a look at it after this. Look at the energy chart. It hasn't broken out yet, right? So it's not like you've really made money owning these three sectors just arbitrarily to start the year, because they looked like crap going into the year. So you have this mean reversion into the smallest sectors in the market and mean reversion out of the largest sectors in the market. That's why the S&P 500 is down 3.5%, right? It's literally telling you that it cannot withstand this rotation without dropping. It's showing you that on the chart. So to say rotation is the lifeblood of a bull market arbitrarily, to me, is a disservice to understanding the market mechanics of the S&P 500, because S&P 500 is a momentum-based index fund. You guys can go to a website like spdr.com and you'll see, right? You'll see the individual makeup of the S&P 500. And that's a great first step for people when it comes to trying to understand the market, is understand what the S&P 500 is made of, right? So you can go here, this website, select Spider ETF, and you can look at the components of the S&P 500 and what it is made up of, right? The ingredients, right? Someone tells you something's healthy, and then you look at the back of the ingredients and it's filled with a bunch of sugar and fats and random stuff. You know it's not healthy. So we have the nutrition facts. Why are we going to just trust marketing claims? We shouldn't. That's dogma, guys. So let's look at this here, right? So let's click on one. Energy. 3.5% of the S&P 500. Woo, right? What the hell is that going to do for your portfolio? Nothing, right? Okay, let's look at tech. 30% of the S&P 500. 10 times larger, right? So you guys get it, right? Let's look at another sector. Oh, materials are doing well, guys. 2% of the S&P 500. Woo, so exciting. Rotation is the lifeblood of a bull market. Not really. Not really, right? Consumer discretionary, 10%, right? The exception here, healthcare, right? 11% of the S&P 500. But like I said, let's actually take a look at that healthcare chart and tell me where you would have bought this. So people want to talk about, oh, healthcare this year, oh, energy this year. Okay, ask them this question. Where would you have bought this? You're telling me energy is the best performing this sector this year, and this is what it looks like. Sweet, so you're telling me you want to own this? Like, we need to get above 148 if we want to own something like this. So you've made money in this if you bought the lows, which isn't trend following. It isn't relative strength. It's just arbitrarily you randomly bought this because it was below its 200 day and looked like it was going to rally. That's mean reversion, right? So I don't get this whole dogma around rotation is the lifeblood of the bull market, or, oh, you can just own healthcare. No, you can't. It doesn't look good. Why would you own this, right? People want to talk about energy. Let's look at energy. Like, you want to own this? This looks really bullish to you guys, right? Energy's up this year, but it's just in this sideways choppy mess for the past, since 20, right? It's still below its all-time highs. It's still messy. So I think that's where you just want to, Sam posts a great chart, great explanation of what's occurring underneath the surface, but like, there's theory, there's posting data, right? And then there's looking at the charts. All right, XLRE. Oh, that's another one. XLV. Oh, that's another one. Where would you have gotten in? Like, so there's not, it kind of gives the illusion there's a trade here. There's not, right? Like, okay, so you buy here and then you have this overhead resistance. So I just kind of want to talk you guys through where I think this rotation is bearish for the market. I know for a fact, and you guys know for a fact, because you're smart people, that we cannot go higher, right, with this being a sustained structure of the market. You need the MVPs on the field in order for the stock market to go up, right? The Mag 7 makes up roughly 30% of the S&P 500, which is greater than all four of these sectors combined, okay? So people want to talk about those four sectors. Well, let's look at the Mag 7 charts, right? Let's take a look at those and let's see what those are doing. Because maybe the leaders are coming back into play. Maybe they're coming off the bench and onto the court, right? Because you ain't going to win March Madness if you don't have your best players on the court. And you're not going to go sustain an uptrend unless you have the best players on the court. So let's just take a quick look here. Max 7, right? Like, is this bullish, guys? Like, let's take a look here. Mag 7. Like, chat. People want to tell you rotation is the lifeblood of the bull market. But how is rotation the lifeblood of a bull market when 30% of the market's going down and the market's going down with it? It's literally telling you that it's not. It can't be. Not with this high of concentration. Maybe 40 years ago when the market wasn't as concentrated as it is, but rotation cannot, mathematically impossible, to be the lifeblood of a bull market. Rotation is what's killing this bull market. Look at this. You guys buying this? Right? Like, we're below the 200-day. We're forming a, bearish consolidation here, right? If you were a betting man, like, you would bet this breaks down, right? Like, you would bet this breaks down. Does it? Who knows? We need it not to if the market's going to go higher, right? We need the MVPs on the field if the market's going to go higher. So, yeah, I know I sound bearish. It's more just, it's a messy market. And I just want to I got the CMT letters behind my name to share with you guys real information and how the market is messy. Because when it goes back to ripping and roaring, I'll be right there with you, buying stocks, hand over fist, right? Over here, pumping the market up. Because that's what I love to see. But I just don't see it yet. So, chat, that's kind of what I wanted to talk through. And let's kind of get into some of the chart requests here so we can keep it going. All right, let's see here. Starting with hymns. Let's start with hymns, huh? All right. Right. And I think this is going to be a common theme, guys. Right? We'll see it. Look, this hymns chart looks just like the AppLovin chart, looks just like the Palantir chart, looks like just like any momentum chart at the moment. So, great chart to bring up, chat. This one's W. I do want to kind of just mark this up real quick and then we can talk through it. And I also like to mark up the charts as we go to kind of just show you guys how I look at the market, right? So you have a big base here, right? Kind of got extended, is pulling back, right? It's pulling back here to this moving average, right? Pulling back to this $25 level where former support was on the chart. And there it is. All right. So there's your setup in hymns, right? We'll see if it's a breakout retest of that 25 areas where the real support is, but it looks like around this $33 area it might be trying to find support, right? So zooming out, I think maybe we pull back even further to 25. That'd be another 27% correction, right? This thing has already got cut in half off its highs, right? So things don't go to the sky. We can see that. We've seen it's been a messy market. Let's kind of just zoom in, look at the daily, right? So like I said, that 30-35 level right here, right? This is what you're looking at if you're trying to trade this shorter term, right? Nothing too crazy. Don't overcomplicate it. Draw some risk levels because that's what this game's about, managing risk. All right, there you go. So, right, this starts to build out, right, and starts to follow through, which you'll hear me say over and over again. That's what we need to see from this. We need to see it kind of get back above some key levels and see some follow through. But if you want to be long this name, I would wait till we get back above, right, or set a stop at this low around 30-ish bucks, right? Set a stop there, and then you have room to trade to the upside, but I wouldn't be in it if it's below 30. I think we're at a critical juncture, right? How I would kind of mark up this chart a little bit more is like this, right? It's one of these binary trades, right? Which you have a clean risk level. So I'll give it to the chat for that. So clean risk level here, right? We just want to see how this resolves. I think go long or short if we get, right? If we break down below this level, go short. We break up back above this level, you can go long. I think it's a pretty binary trade here in HIMS. But you'll see this got kind of set up in most of these type of charts right now, guys, right? Like, you guys know I look it up, right? Same setup. Palantir, same exact setup, right? And all these charts kind of look similar right now. You can see Palantir here, right? That's similar. Actually kind of building a base here, right? And actually getting back above this level, right? I think it's a low probability trade, but you have clean risk reward, which is really the point of this game. Like, you really do just need to manage risk in these type of names. But against 80 bucks, right? I like Palantir more than HIMS, right? If I had one place to kind of put the money from a trading perspective, Palantir against this $80 level, right? It's building that little base, and you can kind of see it here on this chart. And then real quickly, I'll just zoom in even further. Let's look at the past month, right? So you can see this is building a base. It's taking time, but it's kind of building this sideways base over the past couple of weeks. And so I would use that low, 75 bucks, right, as kind of my level in something like Palantir, right? That $75 level, right? Still a decent amount of risk to the downside, but if this thing can get back to all-time highs, that's what you're playing with if you're playing in this field, right? You're playing with volatility, you're playing with larger numbers set. So just set your portfolio levels accordingly, right? AppLovin, similar looking chart, right? But this one's below some key levels, right? This is the key level it held for AppLovin. Okay, but it's messy. Like, I don't know what to do with this thing, right? I don't really know what to do with this. It's maybe a bull flag. I don't know, right? It's been cut in half. So this stuff takes time to repair this damage, chat. I think it can occur, but you just have to find those levels, find those key levels on those charts you guys like, and manage risk accordingly. So W from the chat when it comes to HIMS. We have a Celsius holdings, right? Starting to turn around. W from the chat for Celsius, right? Good looking chart here in Celsius. I actually don't hate this at all. But let's zoom out a little bit. Okay. Yeah, it's trying to bottom, right? Trying to find a bottom here in Celsius. And guys, you remember I talked about earlier the SPY and how it's taking baby steps. What we actually like to see happen in bottoms is we actually like to see them thrust and make these big moves. Right? We had a 46% week, right? We had a 21% week. We like to see people actually allocating back into these names. The thing I'll say here about Celsius is it is going to start to run into some overhead supply here against this 200-day, right? This gold line is a 200-day, right? So the easy money, right? Short-term easy money, right? Not longer-term easy money because you could get in if you want, but the short-term easy money's probably been made in this trade. But you have the potential for a bottom to form, right? You have the potential for this to kind of complete, right? This moving average is probably going to continue its way down. And maybe, right, you use that as your risk level. See what it does against the 200-day, right? Maybe just wait for it to kind of interact with this 200-day before you kind of put a trade on, because you have about 8% until you get to the 200-day, but that could be where it gets rejected. So I'd probably just wait here, right? Another name, keep on your radar, maybe set an alert around 36, 37 bucks and see how it's kind of functioning against that 200-day. But you can see it's starting to reverse its way out of this pain that it's bared over the past couple months. So another W from the chat. Just think it needs more time, right? I think a lot of these charts just need time. AGMH. Let's take a quick look at that one. Nothing to say, guys. 7-cent stock. No thanks. I see a bunch of Mag 7 in the chat. I'll get to the Mag 7 here in a minute. TNXP. Okay, pharmaceutical company. I I like to trade edges, right? And risk management is one of my edges. A name like this, right? I don't see an edge. Like I don't see an edge in something that looks like this longer term. I see hope, right? This is hope and dreams, right? Hopes and dreams, hopes and dreams. And that's what a lot of biotech is, right? A lot of biotech is hopes and dreams. The world, this drug's gonna change the world, and it doesn't. Hopes and dreams, this drug's gonna change the world, and it doesn't. Hopes and dreams, this drug's gonna change the world, and it doesn't. Hopes and dreams, this drug's gonna change the world, and it doesn't. Right? And Price knows these things, right? So wait for something like this to get in an uptrend before you go swinging the bat at it from this perspective, because I don't see a good trade in this type of name at the moment, right? Like not something that looks good to me, not something that I can understand how to manage risk in. But if you're in that biotech space, look at something like ARQT, Arcutis Bio. Against 15, I like ARQT, right? Good looking name, right? You have this structural change, right? You need this structural change to take place in these bio names because that means people with money that are smart are getting in, right? You don't need to catch bottoms in bio names for them to really kind of take off. So something like ARQT is a name I like in the bio space if that's a space that you're interested in. I don't keep up with a ton of biotechs, right? Because it's all these huge moves that are hard to catch. But I think ARQT is a name to look for in the bio space. All right, I see TTWO. That's take two, right? Shout out Howard in the chat, sharing some names. So let's get over to that one. Ooh, Howard's mind's in the right spot. This is what we want to be looking. This is what I'm talking about. W to Howard Linson in the chat. This is huge, right? Big base, right? He knows this. Big base here. I will tell you, right? The relative strength here is crazy. I still think it's a low probability trade that it breaks out, right? I know it's showing relative strength. I know it has the possibility to break out. I know it's a huge base, but the majority of stocks aren't breaking out in the U.S. And so I think this might be somewhere where people feed the ducks. Unfortunately, that's kind of how the market works. But I think we get above 210. You have clean risk levels, but that's kind of lame, right? I think this longer term chart, kind of lame to say that. So, right, obviously that's your risk level. If this fails, get out quickly because I think failed breakdowns is what we've seen a lot of in the market, right? I'll just give you a quick example of that. Tesla, right? Tesla, and then I'll get back to take two, but I just want to show this example real quick. Tesla, that right? Similar setup to that take two chart, right? And then what happened? Right? Failed breakout, breakdown, right? Whoop, 50% cut, right? Even the S&P 500, same thing, right? Just doing this as a thought exercise, guys, just to kind of show you. You zoom in, same thing. And then I'll get back to take two real quick. But, right, 610, you had this failed breakout here, right? Failed breakout, fast move to the downside. So that's how I want to, like, I tend to think about the rule, not the exception to the rule. But you have clean risk levels here when you zoom in this take two, right? So you have this former support here, right? It's kind of gap and go'd a couple times. So that gap that's trying to fill here, that's where I would kind of manage risk against in a name like this. So this 190 would be my stop if it is something you want to take long. I would also say here, right, you have very bullish RSI readings, right? So RSI staying in this bullish regime, staying above 40. You're kind of seeing it kind of work its way up here. And obviously the relative strength is great. I just don't know if it's a high probability trade that it gets back to all-time highs anytime soon. But it's a name for sure. Keep on your radar. For sure, keep on that. Keep that 218, 220 mark. Set an alert for it. If you kind of get in here, right? What you're risking, 7% to the downside against this 190 level, which I would probably still hold and see if that turns into support, because this could become a support level here, and then you could add. So I'd probably just being lame. It's lame to say, but right, you have 4% upside until you get back to all-time highs. I'd probably just wait till it gets back above 220 before I swing the bat on it, or wait till it comes back down here to this 195 level and swing the bat. I think here you're just kind of stuck in this no man's land from a trading perspective. Longer term, right, just start to average in if you like it. Obviously it's a beautiful longer term chart here. So those are kind of my thoughts on take two. W from the chat there. XLK from Alpha Tuna. What up, Alf? What up, Alpha Tuna? Let's look at XLK. Yeah, dude, this is not what I want to be working with here. XLK is a mess. Messy, messy, messy. Right? Kind of zoom in. It's a mess. Right? It looks like that mags chart. It's like I can't even clean this up to look nice. It's just messy. Right? What do you have? You have a downtrend. You have a downtrend that's kind of forming this little consolidation here. Right, forming this little consolidation, but looks ready to break lower. Right, doesn't look ready to resolve to the upside. So not something I'd be swinging the bat on if I was you guys. I think this short term probably resolves lower. I don't see much of a trade set up in these names, guys. It's not that type of environment. I think, right, maybe you manage risk against this low, or you wait for this to break down, but it's probably just going to chop sideways for the next couple of weeks until we see a resolution in the mags names, right? That mag chart needs to resolve for this to resolve. So I would just keep an eye on this stuff, right? You still check in, right? You still feed the ducks, right? You still put the bait out into the field, but into the pond. But yeah, I just don't see a great setup in XLK at the moment. All right, BSX. Let's take a look at BSX. Boston Scientific. See? Healthcare name, right? So some of the individual charts within healthcare are looking good, but as a whole, still has work to do. Yeah, this is a beautiful chart, right? Beautiful long-term uptrend, right? These are the names if you have to have exposure to the market, right? Like some of these names are the places that it's paid to be. I will tell you what's interesting about this chart, actually kind of gets me back to Howard Lindson's thoughts, is you have here, right? You have this topping pattern and then this follow through to the upside, right? We've had this in a lot of charts recently. We just haven't seen the follow through to the upside, right? So Howard brought up last week, broker dealers, right? See this chart, right? Very similar setup here in broker dealers, right? Had this huge topping pattern and then we're starting to see that follow through. So you're seeing really good risk reward scenarios. You're just also seeing low probability trades. So, because like, all right, that went up, but look, RSI is starting to curl down. So maybe this just breaks back down. But if you were going to swing the bat, it's when those risk levels were really clean, like last week. So shout out to Howard for broker dealers, right? 4 or 5% past week and a half. You wash your hands, you get away from it because it's a messy market. But Boston Scientific, I would say similar, right? Like very similar looking chart. Right? Same type of thing. It's starting to struggle here, right? If you bought there and you had that clean risk reward, you made your money. Now it's starting to fight with that 50-day and that RSI is starting to curl down. So I don't see a trade in this until it kind of clears that level. It's kind of in that no man's land, right? The easy money was made. It bounced off support. Now what's it going to do, right? Like it got off the mat, right? Got punched in the face, got off the mat, but now it has to box again, right? Like just because you're in a fight and you get punched in the mouth and then you get off the ground, like you didn't win, right? You just didn't lose. So we need to see follow through here in these types of names as a whole from the market. But honestly, not a bad looking chart. Canf, C-A-N-F. Yeah, not touching this, guys. These, right? Find it. You're gonna have to find someone else to do chart requests for these biotechs. Like I don't know. Do you want me to lie and tell you I have an edge in something like this? Like, what do you want me to say? yeah, they're making a drug that's going to change the world. Like I don't know, right? This tells me they're making the wrong kind of drugs. So you need to make a better drug. So I don't have any edge in those types of names. Grab. Let's take a quick peek. Grab Holdings, good looking chart, guys. Okay, right? We need that follow through. That's your level. That's your level and grab. That's your level, right? This 450 area, that's your level in this chart. So, good looking chart. But yeah, 450 is kind of your level. If we zoom in a little bit, it's probably messy. Yeah, see, you had that same thing we're seeing in a lot of these, right? You had the oversold relief rally. Now you actually got to get up and fight. Now they actually got to stand face to face with that opponent again, right? They thought the fight was over, right? They got off the mat, but now they got to start swinging. So let's see them swing. Let's see them get through some of these levels. But overall, I like this chart. Good looking chart longer term. Just need to see it kind of resolve from this this little consolidation basing thing. I don't see an edge in entering it here. Maybe wait, see if it does get punched, if it comes back to this 200 day and you see some follow through, or if you see follow through above this 50, right? 2 or 3 closes above that 50, see if it can kind of work its way up. But good looking chart from Simpler Stocks. I think that's a good looking one. Someone said Taiwan Semi. So let's take a look at Taiwan Semi. All right, all right. Don't love it, right? Looks like those mags. It just look like bear flags, right? Don't love the look of Taiwan Semi here, right? Just kind of have this messy, messy box, right? Get out of the box below the 200 day, right? People say nothing good happens below the 200 day. Still dogma, which is fine, but there's a reason they say that. These are just low probability trades. And all these other trades were above the 200 day. So you really have to like zoom out and see on these types of charts, okay, look, a lot of quick moves up, but then they all kind of failed below the 200 day. So smart little rule of thumb, trade bullish setups above the 200 day. Don't trade bullish setups below the 200 day, right? Because the fact that it's below the 200 day tells you that some bullish setups failed. If bullish setups didn't fail, it wouldn't be below the 200 day. So just a quick little, right? Sometimes I think we don't think about the logic behind what we're doing, right? If a stock is now in a downtrend, right, that means that the uptrend patterns, the bullish patterns are failing. So just be aware of that while you place these trades. That's why they call them low probability trades. But still, not a bad looking chart if you zoom out. So wait for it to get back above the 200. On to, this is a mess, guys. Ooh, ooh. On to the next. 130 is your level, right? Kind of had that initial bounce, but you need to see the follow through. Oversold bounces aren't bullish, right? Like oversold bounces that have follow through are bullish. So just wait for some follow through in a name like this against that 130 level. If you're looking at it for clients or you're looking at it from a portfolio management perspective, look at it versus SMH to actually see if it has the potential to turn around. And right, it's kind of right, it's been a laggard on a relative basis. And so we don't like to see laggards on a relative basis, right? So this just looks like a top, right? If we see follow through to the downside, feel free to take it short, but this isn't a bullish pattern, right? We could get a not a top, cool, but not a tops tend to work early in bull markets, not later in bull markets when the leaders are defensive sectors, when the market's below its 200 day, when the market's making more new lows than new highs, right? So that's why we look at the environment, because you guys are sharing trades that worked a lot better in a cleaner environment, right? And we're not in that same market environment, right? This is the thing about that, right? Like this was the market environment we were in for a long time, right? Let me just apply. Let's do a couple things real quick. Edit this chart up real quick and I'll explain it after. All right, guys, here we go. Right, so this is the 200-day moving average on the S&P 500, right? It's an area, so it shades it when it's below it, right? Placing bullish trades while it's above the 200-day is a great idea, right? But then once we get below it, look what happens to those bullish trades, right? They look good, then they fail. They look good, then they fail. They look good, then they fail, right? They work, they work, they work, they work. Now we're below it, right? So it's guilty until proven innocent. We got to get back above that level, right? Which isn't far away, right? 3, 4, 5% before we start thinking these NADA tops are going to work, before we start thinking these bottoms are going to work, because they typically don't work when we're below the 200-day. Like, that's the whole point of this. So, right? Like, you don't go fishing in Michigan in the winter, right? On a boat, right? You ice fish, right? So just understand that market environment, right? There's a season for everything, and the season right now is not one to where you should be trying to take bullish setups, broadly speaking, in the market. There'll be exceptions, but like I said, it's just low probability. So someone said HIMS is going wild. TBH. Let's look at TBH, and then we'll take another look at HIMS. Bragg house, sweet. Like, what am I? Buy it? I don't know, right? Like, what am I supposed to do with a stock's been trading for a week? I have no thoughts here, but hey, looks good. I don't know what they do, chat, but you can hit me up. Someone says HIMS is going wild. Let's take a look. Not really. Core cap, not really. HIMS is not really going wild in my eyes. Right, got to get above that 35 level that we talked about. So, guys, I know I sound like a gloomer today. Not trying to. The market's just a mess. I think you should just wait for higher probability odds. I think you should wait for it to get back above the 200-day. I think you should wait for follow through, because really what you're doing, if you take a step back and think about it, and I'll stop sharing my screen, I'll just talk this through with you, right? Think about it, right? If the S&P 500 is below its 200-day and it's trading in a messy range, right, and it's not resolving higher, right, you're taking swings at stuff in an underlying trend that currently isn't up. That to me is hope, right? That's called hope, which we don't invest based on hope. So that's where we just want to wait and not use hope as a strategy. We want to use charts as a strategy, and we want to see things start to resolve in the direction up. Not that complicated, but we're not doing that right now. So until we start to see that start to occur more and more throughout the market, I don't see a reason to even be placing a lot of trades until that kind of occurs. But I'll just end on this, right? Just zooming in a little bit. We want to see this yellow line turn into support. And we want to see this start to curl up. And we want to go from a sell the rips to a buy the dips market. But we're currently in a sell the rips that's turned into a bear flag. That isn't really making progress from a Q's perspective. Sort of making progress from an S&P 500 perspective, but is it going to really make progress if the Mag 7 aren't making progress, or is this just kind of a fake out? So guys, if I was you, and this is what I'm doing, I'm enjoying March Madness. I'm in Nashville this weekend celebrating some family members. I'm taking time to learn and study things. Take time this weekend to study rotational analysis. Take time this weekend to understand more of breadth analysis, right? Take time to learn when the market's messy. So when the time comes to strike again, you're prepared for that. So that's what I had this week, guys. Continue to, comment, like, subscribe this channel, right? You can follow my work at StockTwits, right? At Hostile Charts. You can follow my work on Twitter, right? At Hostile Charts. I have a Beehive also linked where I write weekly every Saturday about the markets. And then I also write every Tuesday, Thursday called Thompson's 2 Cents about the markets. Also, feel free to DM me on either one of those and we can kind of chat in the future. But until then, guys, we need to see some follow through in the market. Enjoy March Madness. Peace.